Welcome back, guys. It's been a while. Not too long though. I've been mostly active in the Telegram, just been chatting with people there, sending my updates, sending my ideas. It's been quite fun. So be sure to join. The link is down below. It's an open community. I just share my ideas and we chat and stuff like that. It's great. I've been sending through my analysis, as you guys may have noticed, with the pairs I trade that are normally high volume, and it's why I started trading them. It's been during these summer months a bit low volume, and I just wanted to make this video to just talk about that and give you a few tips on what to do, because there's a few key fundamentals that you still can trade them. And just to show you, like today, if we go and look at the Telegram here, we can see that on my analysis I was talking about gold below this level here, and you can see once gold broke down below this level, it had a nice about 30 pip move, I believe. 38 pip move. I did not take this because this top wick was not satisfactory for me. And then we talked about GJ today with sells below this area here, you can see. And once we got below this area here and price closed, tapped up and then started driving down quite nicely, to be honest. And finally some volume after a lot of ranging in this area. Fake out, came back in the range, and then we saw this big move down, now tapping our weekly support. That's what WS means. And we'll see what happens with that. But this video is going to be on a few tips on how to trade with this summer volume and how to catch these moves. So join the Telegram and leave a like and subscribe if you want to. Helps grow the channel. And I just want to thank you all. We did reach 1,000 subscribers, which is pretty cool, to be honest, starting this channel quite small. So all the support really helps. And let's get straight into this video. So tip number 1 is going to be, don't try change your trading habits or change pair. I see this a lot, and I see a lot of people do this. Is that what they do is that they see like markets are ranging and they said, you know what, let me go and trade something else, like another pair that they see is moving. And what ends up happening is it becomes something like, have you ever seen the meme where you see that person keep switching from one line to another line? But in trading it's completely different, because each line you change, you have to change your whole trading method. Because for example, for me, when I started trading gold, it was also a learning process to understand how it moves. And once you understand how an asset moves, and once you've seen how it's gone through a cycle, and once you've seen it through the summer months, seen it through winter months, and seen that cycle repeat itself, then you more understand the asset, and it can better give you the probability. Because at the end of the day, trading is a game of statistics and probability. And if you keep changing pairs, you reduce your probability of executing a trade, reducing your win rate, and that's not ideal in the long run. In the short term, it might seem like a good idea. Another thing I see people do is try changing their trading session. Now the problem with that is, it's not the biggest of issues to trade 2 sessions, but then also, you need to, as long as you're not over trading, that's okay. And as long as it's not your first time trading that session, I do agree, if you want to try trade 2 sessions and you're still sticking to your rules of 1 to 3 trades a day, which I recommend, then what you want to do is try trade the new session on a demo account. It's not the end of the world, but generally stick to 1 session. That should be enough for you to catch a trade, and it's healthy. It's healthy to get out and stuff like that. Tip number 2 is going to be, we've already gave a few tips out, so tip whatever is going to be basically understanding a market cycle, right? Understanding that if you look at GJ, if you look at gold, and stick around, because I do have a bonus tip at the end that I want to show you about adapting, which is the next thing. If you look at let's say pound yen, right, and we go on something like, and remove these drawings here, and we go on something like the weekly, we can see we've had a fantastic months here. You can see how pound yen has just been pushing up, giving us tons of volume towards the upside. And now it just needs some time to cool off, right? And it just needs some time to chill, which is normal market cycles. If you look in the past, we've had accumulations, and those accumulation periods have been, if you look down here, it's saying March, April, May, and then June, actually, where's June, where we are now? We had a few sideways for June, and then we had, in July some volume came in. So markets have these cycles, and you have to understand that it's normal for these things to go through a cycle, and sometimes they'll have volume and sometimes they won't. Generally, the whole thing behind the summer volume, and what people don't understand, that summer volume doesn't mean we won't get moves. Just normally around August, to be honest, July, August, a lot of these big institutional firms is their holiday season, so you do see some of them taking holidays, and that's why they say that low volume. But I decided to make this video because we have seen low volume recently. So what do you do in these low volume situations? Well, the first thing is, don't try force trades in ranges. If you don't know how to trade a range, either paper trade it and try learn, or don't force trades, because you're just going to end up losing money, and you're just going to end up wrecking yourself. All of that progress you made during the year, you can lose it now. That's the variability of trading. If you have liabilities to pay off from trading, you shouldn't be a trader, full stop. I'm just going to break it to you, you shouldn't be a trader, because trading is at the end of the day, it's an investment, and it's a place to grow capital, not to earn a steady income, because at the end of the day, you're not in control of the markets. You're only in control of your trading. So, understand your place in the market, and understand that, you can't force trades in ranges unless you know what you're doing, right? So that's the only situation. Now, for the bonus tip, and the last thing of this video, we're keeping it nice and short today, is gonna be adapting to different styles, right? So in the past, what we've seen, right, if we scroll back to previous months when we've had volume here, we normally see that when we see a big volume move, right, when we see big pushes, we normally get that continuation, right? We normally get, when we see that, volume has come into the market, we see continuation. You see here, volume came in, continuation, volume came in, continuation, same to the upside. You see that first volume candle, the next candle had continuation. And this is only last month, right? You can go back, like, look at this here. But more recently, what I've been noticing, and this is, there's only a certain extent where you should adapt your trading plan. Personally, I rather not take a trade than adapt my trading plan, because I'm, not too pressured to be forcing myself to take trades. I just feel like I don't want to force myself to adapt my plan. But what I do is I like paper trade ideas and learn, this cycle, how to adapt. And if I do find some consistency and feel comfortable to take a position, I will. So this is something I want to show you that I've noticed recently. So let's jump to the recent times, which we are. What I've noticed recently, this is especially on gold here, and this is part of adapting, my plan, is when you used to wait for that voluminous push of candles, right? And you used to wait for those candles to push, for those candles to show us volume. What I used to do is, once the candle gives me confirmation that there's volume, I would execute on a trade, right? But now what you're noticing is that every time we get a volume-based candle, the next candle normally does nothing. It normally ends up going bearish, or it normally has a stall. And I'll show you these examples on the chart, and this is part of adapting your plan now to saying, all right, once the move is done, it's done. Take a step back, reanalyze, wait for a pullback, something like that. Well, you shouldn't be anyways FOMOing into a move once it's had a massive, like a huge move. You shouldn't be trying to catch that, because that's stupid, because the price could pull back easily to any support. But if you look here, right, for example, there's many examples here. We can see that price ranged, drawings are gonna come back. We had a volume based move, and then price at the top closes doji. Same thing, price came down, voluminous move, then price closes doji. You can see that the price now, we don't for the next candle. So if you're trying to execute after you see this volume move, or on the basis of this candle closing below the range, which you shouldn't be shorting on an uptrend, but anyways, just as an example, you can see that we're getting those stalls. Same situation, not here, actually here, right? We get the voluminous move, the breakout, it stalls. We get this big move, the next candle stalls, but the next candle after that gets a quick nice push, right? We can see the same thing here on the downside, next candle stalls. This different situation here, but these are the types of things that I'm noticing. Here's a volume push, next candle stall. This a bit different. You can see low volume towards the top. Now in this accumulation, you could see that we had some nice, price came down here. Now it's stalled, volume built up, and now we're having this big push here. No bottom and top wick, typical, I mean, no top wick, so that's why I didn't execute on that gold position. But that's, these are the types of things you have to keep your eye out in the chart for. Just small tips to understand, and be patient, right? That doesn't mean you can't trade in these ranges, but just be patient, and don't feel pressured to take a trade. I just wanted to make a quick video, a quick update, and yeah, with that being said, take care, trade sharp, and until next time, peace.